Hi, this is Zach Meir with the Bulletin Board Heroes here at Zach's Traders Cafe for Friday, the 16th of August. Starting off with the FTSE 100, which is towards the top of the range. We're obviously looking for 8,400 just to retest the August peaks, and ideally want to see this market stay above either the floor of that rising trend channel from back in September, 8240, or at worst the 50-day line there just above 8200. If we can stay above those two zones, then we're looking for an imminent breakthrough 8410 and that late May resistance line, and then heading up to as high as 8730, the top of that channel from back last year. Timing on that, I suppose, by the end of next month, although it's rather unheard of for the market to rally during August, September, October, especially in the recent past. Moving on to the DAX, and here it's been a story of recovery. We had the double gaps down for the start of the month, which were rather dramatic, I suppose. Now we're back above the top of the second gap there, 18,000, and even above the 50-day line, 18,200, which means we're focused on breaking that May resistance line there at 18,600 and heading to the top of that rising trend channel from back in September last year towards the 20,000 zone, which obviously seems like it's a long, long way away. But obviously, if we rally like we have in the last week, it may be achieved by the end of next month, but at least 18,600 on our target at the moment, and ideally we stay above 17,800 and the floor of that falling red trend channel from back in April. The Dow is next, and here the market rebounding as well after the rug pull. Here we've had an unfilled gap to the upside above a rising 50-day moving average. We gapped down at the beginning of the month, and we gapped up now, so it's a bear trap island reversal, and that tends to be rather strong, looking for 42,500 by the end of next month at the current rate of progress, and ideally we can break a line of resistance there around the 41,000 level over the next few sessions to finesse the push to the top of that channel from this time last year on the daily chart. Bitcoin is next, and I suppose this is rather more disappointing as compared to the current state of the indices. The situation here is that we failed at the 50 and 200-day lines around 62,000. Below that, we still have the risk of a test of that support line projection from February around 51,400. Ideally, I suppose the rebound happens above 55,000, but it's not really material. We're either back above that December support line at 59,000 or we are not. Moving along to gold, and here in some ways the star of the show has been the least volatile despite falling with the rest of the markets there. The more time we spend above 2,500 the better over the next few sessions, given the way that we're hoping for the top of the channel there from December 2620 now to be hit by the end of this month. Looks a bit optimistic, but at least 2,600 could be possible. Moving on to the stocks, and starting off with Artemis, which has had a decent week. Probably disappointing that it hasn't got above the 200-day line. That's at around 0.92 and 0.91. And ideally, we would want to see it back above 1.1 pence on the top of that falling trend channel within days. The ideal scenario as well in terms of support is that we stay above resistance on the way down at 0.77. So above 0.77, looking for 1.1 pence on Artemis. Moving on to Celadon, which has obviously not had a great week, but or a great month rather. Here we gap down through the floor of that falling trend channel, which is always a rather painful thing to happen. Just the first signs here that we've found a floor there at 27 pence. And basically looking for, I suppose, a move into the 40 area, low 40s, even if we then fall back again after that. So that's the best that can be said about Celadon at the moment. On to Cornish Metals, which had an update this week talking about 2027. The market seems to be very excited about 2027, even though it's 2.5 years away. Current position, though, is we've had a rebound off the 50-day line and also neckline resistance around 6.2 pence. Above that, looking for at least the 200-day moving average, 8.7 pence over the next 2 to 4 weeks. But an unlikely turnaround there from Cornish and quite impressive. DG Innovate is next, and here the bulls have been punched and kicked, but it looks as though there's a bit of signs of life here around the 0.07 area, breaking through the 50-day line again for the first time in a month. Initial target here 0.12, and the sharply rising 200-day moving average. Obviously, we can dream of the 0.2 pence plus area after we've got nearer to the 200-day moving average. But the key here remaining on the right side of 0.07. Helix is next, and here I suppose it looks as though we're in a bit of a coiled spring situation, either side of 20 pence, hoping that this is the floor of the rising trend channel. With the stock has seen that near 19 pence, and looking for a flurry up towards 32 pence by the end of next month at the top of that rising trend channel from the end of April. Stock which I haven't looked at for quite a long time is First Tin, and here nice setup with the basically double floor there, double bottom there at 4.3 pence, and then shares breaking the middle of the neckline resistance at 5.5. Above that, looking for 7 pence over the next 2 to 4 weeks, and ideally we stay above both the rising 50 and 200-day moving averages at the moment. Moving on to a stock I haven't looked at for years, but I see somebody's very keen on it at the moment. And even though I think they're talking about it from a fundamental perspective, what we have here is a gap down that we had at the beginning of the month and a gap up now. So that's a bear trap island reversal, which is actually a very good setup, or in terms of being reliable. Initial target, or at least initial barrier here, 14.8 pence. But if we can break that, it could be 20 pence by the end of next month. Ideally, we stay above recent resistance at 13 pence. So pretty simple setup there. Situation which I'm very proud of this week, which doesn't happen very often, is Novacyt, in the sense that shares were called higher here on Tuesday, or sorry, rather Wednesday, and basically the view was that with the rising 200-day line, they would break that resistance line there from back in May at 53 pence and head up as high as, basically retesting April-May resistance around 75 pence plus, which they've already done. What's interesting now is that above the floor of the latest gap, we're looking for that resistance line projection there at 83 pence, hopefully by the end of this month. The stock which seems to be bubbling under at the moment in the way that Novacyt was doing earlier in the week is Panthera. It just seems to be poised and perched, ready to go up. We've got the 50 and 200-day lines both rising, be a golden cross on Monday. And just really waiting for a proper end-of-day close above 7.5 pence, which seems to be rather elusive. If we can get that, then we're looking for 13 pence. But it does look not like another kind of coiled spring situation on Panthera. Predator is next, and here again looks as though this one is poised. We've had a double unfilled gaps to the upside, rising 50 and 200-day line. So I suppose it's like Panthera Mark II. Looks as though something good is about to happen, and would take the shares to 15 pence by the end of this month. But that is obviously only a technical perspective. Finishing off with Zephyr, which had a bit of a rug pull recently, but seems to be bouncing back. Here we've had a bounce basically just on the rising 200-day line, and the view is that while we're above that price channel floor there at 3.8 pence, looking for up to 6.6 pence by the end of next month. That's it for me today. More updates tomorrow.